Hello viewer, welcome to Manifested Online Classes. My name is Mr. Kimani, and I want us to continue with our revision of brokerages for AFR, and I want us to look on a question.
I wake up to a little bit of drool on my pillow, feel like it's gonna be a bad day. Yeah, I'm tired of shit, and the coffee ain't hit yet, damn ain't that great.
Let's go through the
I don't wanna go to work cause my boss is a jerk and I'm not even that paid. I need a change in my life cause I don't feel alive and there's nothing that makes me happy. Hold my beer for a minute, I'm about to quit my job, cash in for a ticket. I'm going on a trip and I don't plan to visit. I'm gonna stay there till I feel like I'm winning. And this is just the beginning. I need a big change, help me feel like living. I need a big swing, home runs I'm hitting, and I'll never look back, moving on till I get it all. And we all got dreams, we all want things, but what you gonna do for it, how you gonna move for it, what you gonna be, and do you believe you can do anything, but what you gonna do for it, how you gonna move for it, what you gonna be.
First of all, we have the non-current asset, and we have current asset, we have equity, we have non-current liabilities, and then we have current liabilities, and then we have some additional information from note number 1 up to note number 9 there.
Yeah, this is my life, my strife, my right to fight, to die on. And this is my game to play, to claim a brand new name, And I ain't gonna lie to you, I'm a bit nervous that I might screw everything up that I've ever done. But what's the point of living if you ain't having fun? I guess I'll try this, try that, might miss, gotta find what I'm good at. I guess I look here, look there, over where am I scared, where am I at? I gotta make it in this life, whatever makes me happy, know I'm doing things right. Sipping in the summer on a goose and Sprite, I'll find a nightclub for the end of the night, And we all got dreams, we all want things, but what you gonna do for it, how you gonna move for it, what you gonna be, and do you believe you can do anything, what you gonna do for it, how you gonna move for it, what you gonna be.
So first of all, but the first thing you need to consider is the group structure. The group structure. Of which in this case, when talk about now the group structure here, this is a form of a chart which will be showing the parent company shareholding in the otherhood companies. Because in our case here, we have the parent company, which we are told is Radi Limited, and then it has invested in two companies. Now, for us now to be able to get that particular group structure, let's go through the additional information note 1, and that's where we are given that information. We are told on 1st of January 2018, Radi Limited acquired 80% of the equity shares on VUA Limited. So what we are told in that particular point is that the company which is called Radi Limited, we are told that this company acquired 80% of equity shares of the company which is called VUA Limited, of which I told that took place on 1st of January 2008. Now what then we are told in the other point, I think what we'll do first of all, let's keep that information. We go to the last paragraph of note number 1, and we are told Radi Limited had earlier acquired 2.4 million shares in Upepo Limited on the securities exchange at a price of 1.5 shillings per share on 1st November 2017. So what we also told is that this company which is called Radi Limited had earlier acquired 2.4 million ordinary shares in the company which is called Upepo Limited, of which I told that took place on 1st of November 2017, 1st November 2017, of which we are told that the shares now it had acquired here were 2.4 million shares, meaning that the shares acquired were 2.4 million shares, or 2,400 thousand shares. Now, for us now to be able to compute then the percentage shareholding which Radi Limited do have in Upepo, what we need to do is to go to where we have the ordinary share capital issued by UPEPO. If we go back to the statement of financial position of UPEPO, specifically where we have equity, we will be able to see that the ordinary share capital of UPEPO is 6 million. Now, if at all we are to divide that with the par value per share, which is 1 shillings per share, then in that case we will be able to get the shares issued by UPEPO, which will be 6 million, or basically 6,000, because our figures in the statement of financial position are given in thousands of shillings. So therefore, what we need to do is to express these shares which were acquired by Radi in UPEPO as a percentage, so that now we determine the percentage shareholding by Radi in what UPEPO, of which if now we are to express that as a percentage, so this should give us 4, meaning that in that case then we get 40%. And what that means is that from now that particular computation, then UPEPO Limited here, this shall be an associate, and then Mvua Limited here shall be what? Shall be a subsidiary, a subsidiary company. So therefore, in that particular case, that is now our group code structure, and that's what we need to get first of all, even before we proceed and basically be able to do the workings, because by having this particular group structure, this is now which will enable us now to be able to know the various consolidation adjustment now to be done. Now, what we need to do, let's go back to additional information note 1, specifically sentence 2 of note 1. In that particular point, we are told that the consolidation consisted of 2 elements. That is now the consolidation which was paid. That is consideration which was paid when Radi Limited was acquiring or acquired shares in what? In Mvua. And I think from that particular point there, we can be able now to compute the consideration which was paid by Radi Limited in acquiring shares in Mvua, and that consideration which was paid, in other terms, we refer to that as the cost of investment. The cost of investment which was paid when Radi Limited was acquiring the shares in Mvua Limited. So we can be able to compute that from the information which we have. What we are told is that that consideration consisted of 2 elements. One, it consisted of a share exchange in Radi Limited for every 5 shares. That is a share exchange of 3 shares in Radi Limited for every 5 shares acquired in Mvua. So what that means is that when this company acquired the shares in Mvua, first of all, this cost of investment or the consideration, first of all, it was paid through share exchange, share exchange. Now, the consideration which was paid through the share exchange, in that case, we are told that this company was to issue 3 shares, for every 5 shares, for every 5 shares acquired, in Mvua, every 5 shares acquired in Mvua. Now, in our case, what we need to do first of all here is to compute the shares which Radi Limited acquired in Mvua, of which we can be able to compute that, because in our case we know that Radi Limited acquired 80% of the shares in what? In Mvua. And if at all we go back to where we have the statement of financial position of Mvua, we can be able to compute how many shares were issued by what? By Mvua, because the ordinary share capital of Mvua is 5 million. If we want now to know the number of shares issued, we need to divide that with the par value per share, which is 1 shillings per share. So mean that then the shares issued by Mvua will be 5 million divided by 1 shillings per share, and that should give us 5 million shares. So mean that the shares now which were issued by Mvua were 5 million, and take into account Radi Limited acquired 80%, then 80% of that should give us 4 million. So mean that we get 80% over 5 million, and that will give us 4 million. So mean that the shares then which were acquired in Mvua then were 4 million. So therefore, what we need to do is to compute how many shares are issued by Radi as a payment of the purchase consideration, because we are told Radi Limited was to issue 3 shares for every 5 shares acquired in Mvua, and in our case we have computed the shares which were acquired to be 4 million, that is. So therefore, for us to do that, we need to cross multiply and finally divide. So we take 3 times 4 million. 4 million. Or basically, we can use that in thousand of shillings because all the other figures are in thousand of shillings. So we take it as 4,000 and then we divide that with 5. We divide that with 5. And that should give us, if at all we have to divide that with the 1, that will be 8. And that will give us 2,400 shares. 2,400 shares. So those are then the shares now which were issued by Radi Limited here to pay the purchase consideration. Now, whenever now a purchase consideration is actually paid in form of a share exchange, what we do to compute now the amount of money which was paid, we are supposed to multiply these shares with the fair value, basically the market price per share, and at now the shares of this company were trading at. And I think if we go back to point number one, we are told in the last sentence of note 1, that is the first paragraph, you're told at the date of acquisition, the shares in Ladi had a market value of 5 shillings per share. That had a market value of shillings 5 each, and the shares of Mvua had a stock market of 3.5. So mean that at the date of acquisition, the shares of this company are trading at a price of 5. So therefore, what we need to do to compute now the purchase consideration, which was paid in form of share exchange, we take the shares issued by Radi, we multiply that with their market price, which is how much? 5 shillings per share. And basically by multiplying the two there, then we will be in a position now to determine the amount now which was paid in form of a shareholder exchange. So that will be given by we take 2,400 and then we multiply that with 5, and that should give us shillings 12,000. And remember, in our case here, those figures are in thousand of shillings. So mean that equivalent, that is 12 million. So we have that. Then let's go back to the same point, because you are told that the consideration was paid in 2 elements. First of all, there is the element which was paid, or the part of the cost of investment paid through the share exchange, and then you are told that company also was to pay that purchase consideration by issuing shillings 100 of 6% raw notes for every 500 shares which were acquired in Mvua. So that means that other than this cost of investment or the consideration being paid in share exchange, the other part was paid by Mvua Limited in terms of, that is by Radi Limited in terms of issuing 6% raw notes. 6% raw notes. Now what you are told is that Radi Limited, which now was supposed to pay the purchase consideration, it was to issue shillings 100 of 6% raw notes for every 500 shares which were acquired. In our case, we know that the shares which were acquired by Radi in Mvua, in our case, we know they are 4 million. Or basically, because our figures are in thousand of shillings, then they are 4,000. So therefore, what we need to do is to compute then the value of the 6% loan notes which were issued by Radi to pay the purchase consideration. So we do that in terms of cross multiplying, and then we divide. So we take 100 times 4,000. We divide that with 500, and this should give us 8. It should give us shillings 800, 6% loan notes. So mean that the part of the purchase consideration then which was paid in terms of that company issuing raw notes then was how much? Was 800,000. And that means that in our case then we can be able to conclude and say that the total consideration which was paid will be given by the total of the two. That is the amount which was paid through the share exchange and the amount which was paid in terms of issuing 6% loan notes. So we take 12,000 which was paid in form of a share exchange plus 800,000, and that should give us 12.8. And remember, in our case here, these figures are in thousands of shillings. So that means that the cost of investment, or basically the consideration which was paid by Radi Limited in acquiring shares in Mvua, then will be an amount of 12.8. So I think in our case we are through with that. And then in the same point, we are told that the issue of shares had not been recorded by Radi Limited, but the issue of loan notes had already been recorded. So mean that this particular loan notes, a 6% loan notes issued by Radi, they had already been recorded, but these shares which were issued by Radi to pay the purchase consideration had not been issued. And therefore, in terms of how this will be recorded, these shares which were issued, the shares issued to pay the purchase consideration, shares issued to pay purchase consideration, consideration. In terms of now how that will be recorded in the books of accounts of Radi, first of all, that will be debited in the account called the cost of investment, the full amount. The amount now which was paid through the share exchange in our case, we have said is 12,000. And then because this was paid by Radi Limited in terms of issuing ordinary shares, then there is the amount now which will be credited in the ordinary share capital. Now, the amount to be credited in the ordinary share capital of Radi has to be based on the par value per share. In our case, we know the shares which were issued, they were having a par value of, they were 2,400. And what we know is that the par value per share issued by all the three companies, the par value is 1 shillings per share. So we multiply that with the par value, which will give us 2,400. And then the amount which is above that, the difference between the two is the amount now to be credited in the share premium. The share premium of Radi, which will be given by 2,400 times the share premium per share. The share premium per share in this case should be the difference between 5 shillings because the shares were then trading at that, or they were having a fair value of that. The difference between that and the par value. The par value in our case is 1. So the difference between the two of the share premium per share will be that. Of which, if we are to multiply the two, that should give us the total share premium. So we take 2,400 times 4, which will give us 96. So that is now the amount which now will be added to the share premium of this particular company. So, and I think in our case we are through with that, but we have also to remember that when computing the goodwill, because we need to compute the goodwill in respect to acquisition of this company here, Mvua, then you're going to use to compute that goodwill using now the this particular cost of investment. So I think in our case we are through with that. Let's go to point number 2. In point number 2, we are told that as at the date of acquisition of the shares in Mvua, that is now our subsidiary, the fair value of Mvua Limited asset was equal to the carrying amount with exemption to its property, which had a fair value of 1.2 million below its carrying amount. So means that the fair value then was less than the carrying amount, and basically if that is the case, then that 1.2 then is a revaluation loss. And then you are told that this property had a remaining useful life of 8 years. 8 years. So we need to do some workings in respect to that. And what we need to remember here from our knowledge in the group account is that whenever now a subsidiary has been acquired, ordinarily the subsidiary value or the asset of the subsidiary are revalued on the date of acquisition. Whenever now a revaluation has taken place, then in that case we refer to that as a fair value adjustment. Now, in respect to that fair value adjustment, we are supposed to make two consolidation adjustment. One, we are supposed to make a consolidation adjustment known as a revaluation adjustment, of which now this particular adjustment is supposed now to be made in respect to the revaluation gain or revaluation loss arising from what refers as the fair value adjustment. Now, in our case, what we are told is that the fair value of the property was less than the carrying amount, carrying amount with an amount of 1.2 million, or in a case, let's just use a figure in thousands of shillings. So mean that this, if now the fair value was less than the carrying amount, automatically what that means is that that was a revaluation loss. Now what we know is that ordinarily whenever now a subsidiary revalue its asset at the date of acquisition, that revaluation is never incorporated in the books of accounts of the subsidiary. So therefore, that's why we are supposed to make two consolidation adjustments. The first one should be in respect to the revaluation adjustment, and therefore this particular revaluation loss, in terms of how we are going to account for it when preparing now the group financial statement, first of all, that one will be affecting the group PP, and take into account is the revaluation loss that will be deducted from the group PP2. It will also be affecting what if as the revaluation reserve of the subsidiary. So mean that the revaluation reserve of the subsidiary still will be reduced with an amount of 12. And still what we also need to remember is that because now this particular fair value adjustment took place at the date of acquisition, then still this reserve which arose on the date of acquisition, this shall be treated as a pre-acquisition reserve. And therefore, when computing now the goodwill in respect to acquisition of Mvua, that is one of the component of the net asset,
Thank you for watching this video. Don't forget to get yourself a copy of our professionally prepared study text and revision partners. Visit our shop along Tom Boyer Street, Pioneer House, 3rd floor, opposite Fire Station.